Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of September 18th, 2023. We're going to touch on where we are in the S&P 500 year to date, as well as what we did last week and where we are moving looking ahead for the rest of this year. We will also touch on some economic data as well as interest rates and go through the option trades that we have on the option trading platform. With that said, I think it's super important that we understand what the rich are doing to get richer so that we can use similar strategies and do the same. If you're new or learning options, stick with me through this. I promise there's a lot of details that we're going to touch on during the video. And if you have not subscribed yet, please do that now so you're informed of future videos, as well as hit that like for me. Let's get the video out to as many people as possible. Disclaimer, I'm not a financial planner, so please do your own research. If you're new or learning options, I recommend you start small. All right, guys, so we started the week in the SPX, the S&P 500, at 44.57 and ended up at 44.50, so pretty flat for the week. As far as year to date, we are still up about 14% this year. We started at 38.24. The PEs are 18 for the S&P 500, so still slightly high versus the 10-year average of 17 and a half. IVRs are still pretty low, so it does make trading options and collecting good premium and going wide on the short strikes a little bit more difficult. But hey, we're going to spot the places in the market where we can make some money going forward. Last week we had some numbers that came out. The most important one was the CPI, the Consumer Price Index, came in at 0.6 versus 0.2% previously. So the CPI year over year is at 3.7 with core CPI at 4.3. So the Fed has said that he's not going to cut rates until we get down to, closer to that 2% number. So if we look at the interest rates, they're not expected to be cut down to the 5 to 5.25% mark until June now. Previously it was May. Now May is still expected to stay at 5.25 to 5.5, and there's May, 5.25 to 5.5, and same with March and January and December. So not until June of next year. So moving on to the earnings insight, FactSet earnings insight report. Let's take a look at that. We've got on page 1, we can see that the Q3 estimated earnings growth is 0.2%, first positive growth since Q3 of 2022. And let me expand that a little. And then the 12-month PEs, again, 18, talks about down here as well on the valuations. So, I think we're going to trade back and forth until, the beginning of the year, first quarter at least, before we really start to move into a bull market, is my opinion. But let me know your thoughts in the comments below. Moving on, page 13 of the report, we can look, analysts are projecting 8.2% earnings growth and revenue growth of 3.7% in Q4 of this year. And then in calendar year 2024, 12% earnings growth and 5.6% revenue growth. So we really start to enter the bull market at that point. Then, I like to look at over here at page 30 on the report and look at those PEs. And still, we're where we have been for much of this year. But energy is still, PEs are at 12. So I still like energy, the oil stocks going forward. And real estate's a little bit historically cheap as well. And I like the financials, although they look fairly valued at this time. Looking at the different sectors from last week, the 5-day, consumer discretionary did well, and communications as well as utilities made a jump. And utilities year to date has been down. So it's 7% down. So utilities are expected to be pretty good going forward as well. But technology, you can see year to date is up, and then the consumer discretionary and the communications. So let's move on to the trades that we've got on. We still have our corn trade on. Uh, we've got a put vertical spread, only 5 days left, and we're kind of near that. It dropped on Friday 5 points, and we're at 475. If it drops another 5 points, we're at break even range. Actually, break even's a little bit lower than that. Let's look at where we are. So we've got a break even all the way down below, 467 point. But I really like this curve mode on the option trading platform. Again, this is Tasty Trade. Please use the link below if you'd like to sign up. It's a great platform, and I love this curve mode among many other features that it has. And so that's corn. Still on corn. I'll probably close it out early next week on any up day. And then we are still at 12 months. Let me fix the chart here. We'll go to the days, and let's go to 1 year or year. Let's go to year to date. So you can see year to date we're still at lows with corn. So I'm long corn here. Advanced Auto Parts. This is one that I put on last week. It's at lows. I noticed it was down, and we previously had done a earnings trade and did okay in it. And I did a little bit of research, and it is a solid stock fundamentally. So we're up $187 in the last 30 days. But being at all-time lows and solid fundamentals. If you go right here on the tab to the fundamentals, let me see, where is the fundamentals? Research. They're not, no financials available for some reason for Advanced Auto Parts, but the balance sheet and income statement are pretty good, and the stock is way down. So, I mean, they could get acquired as well. But I like Advanced Auto Parts long. Adobe, let's see where we're at. Adobe, we did an earnings trade, and it dropped down quite a bit. Let's see where we're at right now on this one. We're, looks like up $100 there. Yeah, $101. So we're within the range. Oh, we had a real wide iron condor. Look, 500 to 600. So it did drop. We were at the 550 point when I put it on, and it dropped 23 points following earnings, and we're still well within that range. So what I did was I put another put spread on. I know Adobe is a solid stock long-term, great fundamentals. And with that drop, I took it as an opportunity to put on another put spread, thinking it may not sell off that much more. I actually did it, it looks like, in the prior expiration date, 19 days to expiration. Not sure why I did that, but not sure that was intentional. But we've got that on. So any premium comes in, we'll look to take those off and profit. AMD, 100 to 120, we're at the lower end of that range right now, but AMD has dropped quite a bit recently, and I like AMD long term, definitely. So if we look at how we've done in it over the last 30 days, $340. 458 over the last 60 days. So we've done pretty well trading AMD. Amazon, long Amazon, they're a behemoth. Great stock. We've got the 135, 140. Puts credit spread on at, I really think that the price can continue to increase in Amazon, even though it is high. I think they're fairly valued, so I'm going to stay long Amazon since they are so dominant at this point. We've done decent in the stock, over the last year. 158, not great, but we've done okay. Bank of America, we're long the bank stocks. They haven't come back. I don't expect that until the beginning of the year, but we'll stay long the bank stocks. I've got a couple of leaps on. Any big move up, I may throw on a call to do a poor man's covered call. However, there hasn't been a tick up lately. Costco, we've got an iron condor right in the middle of the range. It's got still pretty good IVR, so I think that's why I put that trade on recently. Last 30 days, we've made $99, but it seems to trade within a range, and we're in a good range right now. Costco is a dominant player. Earnings on 9/26, and we're in the October 20 chain. So we may look to recenter prior to earnings coming out. Got my morning iced coffee here. But IVR is at 22, so I like the trade. Chevron, put that on last week when oils was down a little, and we've got the 165, 160 put credit spread on, and it's we made 130 bucks in the last 30 days. But I like trading Chevron. I compared Chevron and Exxon, and Chevron was down a little bit lower price. They both have super low IV ranks right now, but I don't think you can go wrong with Chevron or Exxon. But Exxon, you can see, is at highs, so that's why I chose Chevron. DraftKings done pretty well. Over the last year, we've made over $1,200 trading in and out. We've got the long leaps options, and then we did a poor man's cover call selling the 233 calls for 184 plus $38 against it. So you make over a couple $100 every month trading against these leaps that we paid half price versus buying the stock outright to control 100 shares. It's not a bad deal. If we do that every month, by the end of the year, we may own those shares, control those shares for, almost break even. But DraftKings has continued to do well. We do well as the stock price moves up with that poor man's covered call. Dollar Tree, we did a put spread. It's down a little. And let's see, good fundamentals with Dollar Tree. Although with it being so far down, I think that's why I put that one on. But IVR is kind of low as well. But not loving that trade, but it should do okay. I'm not too concerned about it dropping further. DocuSign, I'm a little bit negative in DocuSign. It's at its lows, but the fundamentals and income and balance sheets are great. So I've got to research. I probably need to do a little bit more research and find out why it's so low. They did have earnings, but and that there must be something to do with earnings and why it dropped. But I'm okay with being long DocuSign. I'll just continue to roll to the next month. I'm pretty confident it's not going to go a lot further being at lows and such a great company. Enphase Energy, it's at lows as well. 120 put credit spread. I continue to just stay long. I think we're good down to 118, so we're still in the profit range. It is at all-time lows, and the inverters for solar. It's going to be a growing market and continue to do well, especially with the EV charging as well. Golding, small gold stock, we're going to pass that one. Lennar, 110, 125. We're in the middle of the with an iron condor, still in the profit range, and we're up a little bit on Lennar going forward. Wanted to get a home builder in there. Medical properties, still long. They've been hurt by, we've talked about this one in weeks past, so I'm not going to dwell on it, but there's a couple of hospital chains that have struggled with receiving payments from the Fed, and Medical Properties is the largest healthcare REIT, so I'm staying long. Oracle, this one, so we had an earnings trade, and I made a video on it, and I missed. So sometimes, the stocks don't go our way, but you can see where, on the 12th, I sold an iron condor, the $5 wide, 110, 120 for 204. Then there was a big drop down below 110. So I rolled down the uh, call. Oh no, I put on, looks like I put on another, uh, hang on, let me go to 30 days. Okay, here we go, 204. So then I closed out my 110, 100 put. I left my calls where they were at and sold a wider put spread as well. So I had two long put spreads and the call spread on. The call spreads I just let expire, worthless. And since then, uh, we have come back and we're only down $62 after these trades. So this is the type of adjustment that can happen when you adjust and put on a few more trades. But now you can see we're right in the middle of that profit zone, and we've already had a big drop in Oracle down to that 113 level. So this is where I talk about sometimes after a big move like that, I put on another iron condor around that strike because there was a reason for the move down. And most likely, I mean, what I've seen is that it can stay in that range for some time. So it gives you an opportunity to make up for the loss. So I'm actually looking, normally on a trade like this that goes wrong, I want to break even. But if you look at how much premium we've got left, $291 left to collect. And we're already, only down 62. So we're going to make over $200 if that stock price stays in between the short strikes by expiration. So I'm looking to profit still a couple $100 on this earnings trade gone wrong. So if you place this trade and if you've made any adjustments, let me know what you did as well. And hopefully it worked out for you okay. Palantir, I'm long Palantir with, I sold the 15 put option and I've got a leaps option on as well. We've done pretty well in Palantir. Let's see. As far as the chart, we make money as it goes up. And, it's been trading in that 15 to 20 range. Anytime it gets down to 15, I want to stay long Palantir. And, over the last, 180 days, we've $136. But I expect Palantir to do well going forward. So I'm going to stay long right now. And PayPal, good company. And at lows, we've got the 60-65 put spread. It's moved up a little bit, helped us out last week. So we've made some money so far, and look to continue to profit as it moves up in price. SoFi at lows as well. It had a big move up last week, so we made a little bit of money back that as it had been down. But definitely long SoFi. We're controlling. We've got 300 shares and controlling 700 more, and we profit as the price gets up. Above this 9.5, we'll make money hand over fist. And I think SoFi is a company, especially with the student loan repayments coming back. I think that should help the stock as well. We'll see. SOXL is the semiconductor index, and we're long that. And we've got puts on in October. We've got the October 20 regular, and then we've got a 19 put in on October 6th. SPY, 430, $425 wide iron condor, and we are right in the middle of the range. So that was just one I put on just to have on, put another trade on, but IVR is pretty low in SPY. You know what? SPX I sold out of, but again in SPX we did pretty well last week. I didn't trade it a lot, but I think we made 190 bucks last week. And so you can see over the last 30 days we've made 1,755 bucks in SPX. So happy with how the 0 DTE and the 1 DTE trades are going. We can see that on, let's see, so 9/12, getting my dates mixed up. Okay, so 9/14. Okay, so here, starting down here at 9/11. All right, we sold the 480, 485 call credit spread, betting that the SPX would come down. And of course, what I do is I look at the SPX charts on TradingView, and then I kind of pick when feels like we're at a resistance level, and then I'll put the trade on. So after the market opens, the first 15-30 minutes, I'll sometimes, if the market's up, I'll bet against and put on the SPX call credit spread. I collected 285, and then it did not move down. So by the end of the day, I rolled to the 1 DTE next day, the 12th, 484.90, and collected a $1.15 credit. So I had to go $10 wide in order to collect a credit. The market opened down 631 right at the open. I closed. So that gave me an overall profit of 125. I wanted to get out of the $10 wide because I'm risking $1,000 at that point, and I was happy with making $100, $125. So then on the 14th, we did the same thing. Put on the call credit spread. Rolled to, I had to leave actually on the 14th, so I rolled early to the 15th, and $10 wide, collected 10 cents, and then closed for 230 for a $65 winner. So 65 plus 125 is 190 bucks for the week. So that's what we did in SPX. Let me know if you have any questions, what you're doing in SPX as well. TDOC is the next one. TDOC, like this stock long term, we've got a leaps on. It hasn't moved much recently, but it is at lows, and it's a healthcare stock that is poised to do well and good financials. Bonds, 94, 90 call credit spread. They're at lows. That's why I have that on. And it had a good IVR when I traded it, but it hasn't moved much. We're still at the 93 level, it looks like. Toll Brothers, this was an earnings trade. I rolled down my 80 call credit spread, so now I've got an iron fly on in Toll right around the 80 strike, and you can see the profit range. We're still in the profit range right here, but I'm not going to roll further than that because at that point I'm going to be adding risk to the trade. But that's the furthest I'll roll. If it moved down further, then I might sell a put credit spread against it. But for now, I'm going to leave that. Wow, it still has pretty good IVR at 28, and let's see. Yeah, and earnings already passed, so interesting. Verizon owned the shares outright, 100 shares. It pays a healthy dividend. That's why we like Verizon. I'm just going to hold that on to that one for income. And then Wells Fargo, bank stock, hasn't moved much, just like Bank of America. So yeah, I think that's it. Appreciate you guys watching. Please remember, hit that like and subscribe button. Share the video with your friends. Let them know, hey, we do live option trading here every week and summarize our trades. I'll put a link down below. There's a free options workshop. If you haven't grabbed that, be sure and grab that. It talks about the benefits of trading stock options over buying stocks outright. And thanks for watching again, and see you in the next one.